Hello guys, great to see you here with us. This is Monday and we are just on the starting line, just minutes before a new and exciting week. And this week we want to dedicate the entire Investors Club to what we saw last week, and I want to elaborate and I want to put the focus on the day trading, the art of day trading, the first day of a hot IPO. And actually we had 14 of them, and actually we are going to focus on my trading on Friday, where I was able to make a little bit over $15,000. This is, guys, not swing trading. This is only in one day, and you are going to see what is our technique. I'm not going to get into lots of details about the technique, because this is a technique we are teaching in our top trader course. This is the most advanced course for traders who want to make it professionally. But I'm going to give you at least a taste. And here you see a screenshot I took on Friday from 3 of my live trades: APPF, MCRB, XTLY, and this is what I had. This was taken about 30 minutes before the closing bell. So let's see. So you can see right now the potential, and the real question is how to take this potential, something that we as professional traders are trying to do every day, into your into your trading and into your actual living of trading. So we will start and understand what is the IPOs, and this is a unit we are teaching in our top trader course, and we are about to launch our next course shortly. So you can just consult me, just email me to shlomo@tradenet.com, and you also have on any slide my email as well as my Facebook page, and you can send me emails regarding that. So what is an IPO? And then we will see the technique, the art of trading the first day of an IPO, and then we will see how this technique actually getting into place when we are trading, when we traded actually the IPOs of last week. So the term, initial offering, initial public offering, this is the IPO, slipped into everyday speech during the tech bull market of the late 1990s, and back then it seemed you couldn't go a day without hearing about a dozen new dot-com millionaires in Silicon Valley who were cashing in on their latest IPOs. And this phenomena actually spawned the term Siliconaire, which described the dot-com enterprises in their early 20s and 30s who suddenly found themselves living large on the proceeds from their internet companies' IPOs. So what is an IPO, and how did everybody get so rich so fast? And most importantly, is it possible for traders like us to get in on an IPO? What you should do in order to put your hands on an IPO, and what is the greatest financial opportunity you have as individual traders when it comes to IPOs? And why I claim the IPOs are like golden coins on the floor of Wall Street waiting for us to be collected. So we are going to deal with these questions. We are going also to learn a very special and profitable technique I learned years ago in Wall Street, when I traded for JP Morgan, and I'm using in today's market every day in order to capitalize on very large gains from these special events in Wall Street. Now, I'm passionate about the IPOs because it reflects the spirit of invention and innovation of the enterprises who launch the IPO. And usually we are dealing here with new companies developing groundbreaking products and services that transform industries and change people's lives. Today, investors and traders have the opportunity to profit from newly public companies that are experiencing dramatic growth but are not yet well known or understood. And I'm going to show you how to do it for day trading. When it comes to the top trader course, we are also discussing the aspect of swing trading, and this is really an exciting niche in the market. So first of all, what is an IPO? So IPO is the first sale of stock by a company to the public. A company can raise money by issuing either debt or equity. And if the company has never issued equity to the public, it's known as an IPO, initial public offering. If it's the second time or the third time, usually we give it a term of SPO, secondary public offering. Now, companies, we have to understand, fall into two broad categories: private or public. A privately held company has fewer shareholders, and its owners don't have to disclose much information about the company. Anybody can go out and incorporate a company, just put in some money and file the right legal documents. Most small businesses are privately held, but large companies can be private too. And did you know that some of the most iconic companies in the world, international companies that we buy in their stores on a daily basis, are actually privately held? Did you know, for example, that IKEA, Toys R Us, or Hallmark cards are all privately held? Public companies have thousands of shareholders and are subject to strict rules and regulations. They must have a board of directors, and they must report financial information every quarter to the public. So that raises the question, why going public? Going public, first of all, raises cash, and usually a lot of it. Being on a major stock exchange like Wall Street carries a considerable amount of prestige. In the past, only private companies with strong fundamentals could qualify for an IPO, and it wasn't easy to get listed in one of the majors stock exchanges, and being publicly traded also opens many financial doors, like because of the increased inspection, public companies can usually get better rates when they issue debt. As long as there is market demand, a public company can always issue more stock, and thus mergers and acquisitions are easier to do because stock can be issued as part of the deal. So actually, much of the IPOs that we are seeing going public is actually inventing a new coin, a coin that the company can later use as a currency to buy other companies. Trading in the open markets means liquidity, and this makes it much more possible to implement things like employee stock ownership plans, which help to attract top talents to those companies. So getting on an IPO, what does it mean? And let's talk about the underwriting process. And we really need to understand the process before we get into the technique, because much of the technique is actually the logic with the underwriting process. Getting a piece of a hot IPO is very difficult, and if not impossible, to understand why, we need to know how an IPO is done, a process known as the underwriting. So when a company wants to go public, the first thing it does is hire an investment bank. A company could theoretically sell its share on its own, but realistically talking, an investment bank is required for this process. It's just the way Wall Street works. Underwriting is the process of raising money by either debt or equity. You can think of underwriters as middlemen between companies and the investing public. The biggest underwriters are Goldman Sachs, Credit Suisse, First Boston, and Morgan Stanley, and much, and also Bank of America and Barclays, and probably you got encountered with those names. The company and the investment bank will first meet to negotiate the deal. Items usually discussed include the amount of money a company will raise, the type of securities to be issued, and all the details in the underwriting agreement. The deal can be structured in a variety of ways. For example, in a firm commitment, the underwriter guarantees that a certain amount of the stocks will be raised by a certain amount of the money will be raised by buying the entire offer and then reselling to the public. Also, investment banks are hesitant to shoulder all the risk of an offering, so instead they form a syndicate of underwriters. One underwriter leads the syndicate and the others sell a part of the issue. Once all sides agree to a deal, the investment bank then puts together a registration statement to be filed with the SEC. This document contains information about the offering as well as company info such as financial statements, management's background, and any legal problems that may be an issue for the company right now, and of course where the money that is going to raise is going to be used, and as well as insiders' holdings. The SEC then requires a cooling off period, and in this period they investigate and make sure all material information has been disclosed by the company. Once the SEC is satisfied, it approves the offering, and they are going to set a date when the stock will be offered to the public. And later on in this presentation, we are going to see how can I know what is the IPO calendar, how can I reach the IPO calendar, how can I know which IPOs are scheduled on Wall Street for next week. The underwriter and the company attempt to hype and build up interest for the issue. They go to what we call a roadshow, where the big institutional investors are courted. As the effective date approaches, the underwriter and company sit down and they decide on the price. This isn't an easy decision. It depends on the company, the success of the roadshow, and most importantly, current market conditions. Pay attention that while the best interest of the company is to get as much money as it can, the best interest of the underwriter is to succeed with the IPO and not to get stuck with all or with part of the stocks. So this idea is very fundamental, and this is actually the key to our approach when we get to trade IPOs on their first day. What about me? So as you can see, the road to an IPO is a long one and actually also a complicated one. You may have noticed that individual investors aren't involved until the very end, and this is because small investors aren't the target market. They don't have the cash, and even if one of us is a very wealthy person, usually he can put a hundred of, even if he can put hundreds of thousands of dollars into a specific IPO, this is not the money the company is actually looking for. So therefore, individual investors like us hold little interest for the underwriters. If underwriters think an IPO will be successful, they will usually pad the pockets of their favorite institutional client with shares at the IPO price. The only way for you to get shares at that specific stage, what we call an IPO allocation, is to have an account with one of the investment banks that is part of the underwriting syndicate. Also, Colmex. Colmex is one brokerage firm that is specialized in IPOs. So, from time to time, IPO is offering its client to get an IPO, to get shares of a hot IPO in the underwriting price. And for example, I can tell you that I got some shares of Baba and I got some shares of GoDaddy exactly at the underwriting price from Colmex, and that was very, very successful, as Baba on the first day popped with something like 40%, and GoDaddy went lifted off on its first debut in Wall Street by something like 30%, and this is fast money, and usually it's a very, very usually you are quite positive you are going to secure gains and substantial gains in very short time. So but usually don't expect to have an account with $1,000 and to be showered with an allocation. You need to be a frequently trading client with large accounts to get in on an IPO. So but bottom line, your chances of getting early shares in an IPO are slim to none, and if you do get shares, it's probably because nobody else wants them. Incorrect for us to say that it's impossible, but just keep in mind that the probability isn't high, and especially if you are a small investor. That brings us to the question how to invest in IPOs. So today we are going to focus on trading IPOs from the day trading perspective, and that means holding them for a very, very short period of time, probably minutes to a couple of hours, and we are going shortly to discuss in depth how to day trade it. Talking broadly about the IPO arena, with an average $135 billion raised annually, the IPO market is an economically significant investment category. Yet, newly public companies are underrepresented in core equity indices and portfolios of investors, and these unseasoned equities can be important enterprises that are simply unfamiliar to public investors. So let's see what is the potential of an IPO, not only from the day trader perspective, but from the point of view of a swing trader and an investor. Every day new companies are formed, and the more successful ones are able to take their companies public, while only a few IPOs will become household names like Microsoft, Google, Intel, or Facebook. Some relatively unknown newly public companies will see startling share appreciation in their early trading days, and let's go over some recent examples. Let's take, for example, Apollo. It went to the public in 1994 and rose more than 1,100% in 74 weeks. Or CB Richard Ellis, right? It went on its IPO in 2004, rose more than 540% in 156 weeks. And there are many IPOs that are going to double the price in just a matter of days to weeks. For example, Reebok, RWLK, last September made 100% on its underwriting price in a matter of 2 days. All right, and try to and just open a fit, just open shop, which they are actually recent IPOs, which actually had sharp gains days after they went IPO. Because these companies, by definition, are new, they are not well known, making these companies even more hidden. Is that the investment banks that take the companies public by SEC rules are not allowed to issue any research on the company for a period of time after the company goes public, and this is called the quiet expiration. And major indexes are slow to include IPOs. For example, BABA, which was the largest IPO ever in Wall Street, they raised last year something like $21 billion. BABA is not part of the S&P 500. Also, it's not part of the Nasdaq 100. This void creates opportunities for those willing and able to do the correct homework. So, before getting into the first day technique, let's talk about the ETFs. And there are a couple of ETFs that actually tracking the IPOs. And one of my personal favorites, and let's get to my chart, is an ETF called FPX. All right. Where are you, FPX? I'll just try to log on again to my account, and okay, and let's just take the chart. I'll just go to load setting, and I want the 5 minutes. All right, here's the 5 minutes. I'll just get rid of all the indicators here. Okay, here we have also the pivot points. Sorry for that. Load setting again, 5 minutes. Study line. All right, VWAP I don't want, and pivot point I don't want. By mistake I just erased the price. Apply. Okay, and let's see that now. Let's go for the FXP, and I'll just make the watermark visible by changing the colors. Alright, so here are the colors. Let's make them black. Okay, so this is the FXP, and I'll go to the FPX, sorry, and this is the daily chart of the FPX. Alright, and what a nice uptrend, not only since the start of 2015, and just take into consideration this tracks the First Trust IPOX 100 index fund, and just pay attention that for the S&P, the S&P actually barely done anything since the start of the year. The FPX, went up sharply this year, not only this year, and just take a look what it has done since 2012 and even since 2011. Alright, it's just going up as long as this market is going, as long as the IPO market is all the time proceeding. So this is one of my this is one of my personal favorite IPO, and the IPO X100 composite index that this ETF is tracking is an equity index that is operating regularly, with IPOs being added to the index at their 7th trading day upon going public, and automatically exiting after 1,000 trading days, or approximately 4 years after thereafter. This is what the FPX is about. Couple of things I want to talk about is lockup period, and the flippers, and what is the flippers. Okay, so let's get back to the presentation. Okay, and here we can just have a look on the best IPOs recently. For example, FEYFRI. This is a stock that we are trading on a daily basis. A great stock both for swing trading and day trading, and you can see that it went to the public on the 20th of September 2013 and issued at $20 per share, and right now it's trading around $69. So this is about 245% since then. So what is the lockup period? And I'm teaching a technique how to short IPOs exactly on the lockup period, and shortly you are going to understand exactly why they are so interesting for short trade when it comes the lockup period. So if you look at the charts of newly issued stocks, you will pick up very quickly on the fact that a number of months after the company is gone public, the stock takes a sharp turn for the worse. Usually, and I stress usually, this happens due to the lockup period. When a company goes from public to when a company goes from private to the public, the underwriters will make a company's top echelons and workers sign up agreement on a lockup period for stock trading. From a legal perspective, it is a contract that obligates the underwriters and insiders for bidding them from selling stock for a pre-designated time period. The lockup period can last any period of time ranging from 3 to 24 months, and usually it's be set at 180 days. The purpose of the lockup period is to assure investors that the company's founders didn't show up on Wall Street for a quick windfall, but that rather they are committed to the company and that they aim to create value for investors. Up to the lockup period, the company's trading environment is more conducive to trading, and it prevents large shareholders from creating selling pressure on the stock. The problem comes when the lockup period expires and all of the company's insiders can now dump the shares. The result is almost like a bank run, a mob of people flocking to sell shares to cash out the profits they only exists on till then only exists on papers. The oversupply is likely to create significant downward pressure on the stock, and it's usually specifically on the day after 180 days since the date of the debut. So if you just go with me on the chart, let's take a stock called Juno, and it went to the public on the 19th of December 2014. And if you just put the bring up an Excel spreadsheet and put this date 19th of December 2014, and let's actually do it. So I just want you to see how we are doing it. So this is the first day, and you can just see how we have a pickup in the volume for the first day. And I'll just take right now a spreadsheet of Excel, okay, and let's put here, okay, let's take here the name of the symbol. This is Juno. Date, okay, date of IPO, that is 19th of December 2014. All right, and then date date lockup expiration date, and lockup expiration date is just 180, okay, we'll call it lockup expiration days here, and let's move it here, and this will be lockup expiration date, right? And now I'm just going to add the cells together, and Excel knows how to deal with it, and here I get the exact date. This is the 17th of June 2015. So let's go with me and let's see what happens on the 17th of June 2015. And this was just 2 weeks ago, and just look, this is the 17th of June 2015, and the stock went dramatically lower. Look for actually the range of this bar was the high at this day, at that day was 58.23, the low 51. That was more than $7 of range, and you could have just taken it for short at the opening, or just wait for any bar to be a bearish bar and just take a short and wait till the end of the day, or manage it as to manage it from a day trading perspective, and you have here a great trade. $7 on a stock price of $57 gives you something of 15% on one day. Or let's take for another example is Momo, Momo. This is a Chinese company, also went to the public last year, at the end of last year, on the 11th of December 2014. So let's put that, Momo, 11th of December 2014. All right, I'll just copy the cells, and here I have the 9th of June 2015. By the way, if you want this Excel file, just send me an email, all right, and I'll arrange something, and I'll send them back to you. And again, my email is shlomo@tradenet.com. You are more than welcome. And let's look what Momo is doing. So recently, by the way, on May, Momo lifted off, all right, and this is a great surge in the stock, but we are now searching for the 9th of June, where all the insiders can just sell stocks, and this is the 9th of June, and just look how this stock started opening with a lower opening. This is a gap down on the daily chart, and from 1650 it went down to 15. So this is a great fall of more than $1.50 on a stock price of just $16. This gives you about 10% of a daily range, and you see, although it has a great period right now, or although it enjoys right now a very, very bright atmosphere between traders and investors, yet it did go lower on the lockup expiration day. So this is something that we in the top trader put attention, and this is a great trade to. This is only one day, and you have to be very, very arranged in order to know which stocks are going to expire, for which stocks, for which IPOs the local expiration day is next week and the week afterwards. And I'm showing my trades in the top trader exactly how to do it, and exactly how a resource in the internet where everything is already made for them, and they can just browse every week in order to get the stocks that are going to be expired from the perspective of the expiration lockup expiration date. Okay. From here, let's go to watch out for flippers and what are flippers, and after that we'll go to the technique. Flippers, also called stags in England, is the name given to investors who sell shares in the first day or two after a company goes public in the attempt to lock in quick profits. Investment banks don't like flippers and will usually try to prevent them from selling their shares quickly after the issue. Companies are interested in long-term investors holdings their shares for a significantly period of time, not short-term traders, to enable its stock to find the right balance in this new embryonic stage. There is no market rule that forbids flipping. Colmex, for example, allows you to take the quick profits you have earned in a new offering. In contrast, if you try to do this with the big name brokerage firms, they are likely to put you on their blacklist and cut the tap on future issues, or give you, a sour face next time you meet with them. So watch out, flippers. Okay, so let's talk about the first day of an initial public offering that gets a lot of attention among traders. The splash from the debut of a brand new stock on the market is hard to resist, and you are going to see why I claim that. Investors who have been longing to buy stock when it was private for years might pile into shares when they first start trading. First day changes in IPOs gets a lot of attention since they can be pretty large, and I can even now recall some of the biggest gainers on the first days, which include, for example, LinkedIn, which sold 109% on its first day, or Twitter, which went up dramatically, jumped about 80% on its first day. But do these first day pops or losses really tell investors something about the IPOs going forward? The answer is absolutely yes. Analyzing the last 100 IPOs, just 3 of these recent IPOs have seen their IPOs turn positive after a negative first day. Our analysis shows a consistent story, and 3 of the worst 5 IPOs over the past 12 months fell on their first days. In contrast, all 5 of the best 5 IPOs over the past 12 months posted strong first day gains. IPOs represent tremendous opportunity, but if you are going to trade it in the very first day, you'd better come to Wall Street with a plan. So, can we apply conventional technical analysis to trade the IPO? The answer for that is absolutely no. Absolutely not. And see, technical analysis is the study of price changes in an asset over time. Price changes occur due to forces of supply and demand. So, in essence, technical analysis is the study of how the supply-demand relationship has evolved over time. On the first day of an IPO, the forces of supply and demand are in their most raw form. There are no prior support or resistance levels. There are no patterns on the daily chart, and there is no short interest. That means you can't have a trend line on the daily, you can't have moving averages or support and resistance lines. You can't use actually any other tool you would usually apply in a common play. Stocks in their first day in Wall Street are in their most primitive form, therefore. But I can tell you, savvy traders are banking huge gains day trading them on the first day. And frankly, this is one of my it was and still one of my personally most favorite technique that I was trading when I traded in Wall Street, and also now I'm trading in my personal account. And this is just a screenshot of what I had on Friday, and and this is not a one-time day. Actually, usually we can have a couple of them in a month. So today I want to share with you a very simple technique, yet very powerful. I used back in the days I was trading in Wall Street, and today I'm still applying it in the very same rules. I'm not going to get into all the details because this is something that we are keeping for our traders in the top trader course, but I'm going to give you a taste from that. So, given that you can't short IPOs, and a trader's job is to figure out whether a new issue is worth buying for a short-term trade. That means to assess if the IPO is going to be a blockbuster. So this is a technique I call the art of trading a day one of an IPO. And in order to show you how to manage risk and potentially profit on day one of an IPO and do exactly what I'm doing, The first step is measuring initial demand. You get a pretty strong indication of how an IPO is going to fare in the first few minutes after it opens for trading. A good IPO should generally increase in price immediately after it opens, but it's important not to blindly chase. That's where the art of the first day comes in. Alright, so but even before that, alright, how do I know which stocks are going to open, which stocks are going to be presented in Wall Street? What is the IPO list for every day? So for that, I want just to show you my personal Facebook page. Right, this is my personal Facebook page, and you are more than welcome to join me. We have lots of discussion regarding trading, especially day trading and swing trading. So just look for Shlomo Cooper trading, or you can even I'll just paste you the link, the direct link, and every day you are going to have here commentary, actually hours before the opening bell, and each day you are going to see the IPOs. For example, for Friday, on Thursday we had a long list of IPOs, and it was also a fine day in the IPO arena. And on Friday, this is the list of IPOs. Now, there are days that we are not going to have any IPO, so there we are just mentioning there is no IPO. So, this is your first information resource. And if you just click like, that means Facebook is going to understand you like the content, and it's going to push actually this content directly to your page once it's being published on a daily basis. All right, so let's get back to the slideshow. All right. So when an IPO opens for trading, we look for a range to form after the initial move. Now, you have to understand that the stock is not just opened for trading like any other stock on 9:30 New York time. Usually it takes time. We don't know exactly what is the time. So so if I know any IPO is going to be traded using just the resource I shared with you, what I'm doing is just putting it on, just putting it on the chart and have a tabula rasa. I have a blank page and a blank chart until it's starting to dance there, and then I know the IPO has started. We as traders, as professional traders, what we are doing is we are just using alerts in our system that are actually alarming us when a stock has started to trade. Okay. Let's go forward and understand so when the stock started trading, we try to measure, and I'll just put the chart again. Okay, so we will be able to see that and to see actually stocks from Friday, and I'll just put here, for example, GBP GBP was one of the trades we took. Okay, so here, or APPFY, APPF, all right, was another one. Okay, so let's look on that. So I want to look on the range, and this is the first this is the first candle. Now, just pay attention that this candle has actually started on around 11 o'clock New York time. That was 1.5 hours after the opening bell. So the range gives us a lot of information. The formation of the range allows the stock to absorb the selling from flippers or investors who received placement of an IPO shares and then look to immediately sell it. If a stock can hold in a base during the initial phase, it is a positive sign. So I want to see, I first of all measure the first 5 minute stock, first 5 minutes bar. I'm not trading the first 5 minutes bar. All right. Now, aside of that, and I'll just shrink a little bit, the chart. The range I'm looking for in the first 5 minutes bar is at least 30 cents from high to from top to low, from bottom to bottom. IPO is like a new baby that has just come to the world. He knows nothing about the world. He doesn't know if it's a good or a bad world. He doesn't have a character yet, and he's just starting to explore the new world around him and to check its boundaries. The same for a new stock. It doesn't have history, it doesn't have price patterns. It's tabula rasa, a clean board. Usually an IPO doesn't start to trade immediately, as I told you, after the opening bell. It takes time. So what you are going to see at the start is a chart with nothing on it, and in between of couple of minutes to 1.5 hours after the start of the day, you will see a bar starting to dance. It's quite exciting to see it when it's happening. And using our trading room, you're going to hear us shouting at the screen, all right, a new IPO has just started, and then all the traders in the room are just focusing like a hawk on this specific stock. So it's quite exciting, and we don't know if the stock is going to be a volatile stock or a solid stock. We don't know what character it's going to have. The 5 minutes bar is the main key to trade it successfully. It tells you everything you need to know. It's uncovering for you the big secret. Usually the first 5 minute bar is going to be very volatile, and we are going to see a spike in the volume like we see here at the bottom of the screen. Usually the first 5 minute bar is going to be very volatile, therefore, and there are times when we see more than 25% of all the shares float are exchanging hands in the first 5 minutes bar. Now, a part of that, we have in the top trader course 7 parameters we want to examine. This is like a checklist, and we want to check all of them. We want to have green ticks on all of them, all of this list, before we are going on an IPO, and this is going to increase your chances dramatically to have here a winner. After the first 5 minutes bar, and should this stock meets all the 7 criteria, then I'm placing I'm just placing here an entry above the high. Remember, the underwriter, which are the big investment banks in Wall Street, are the big elephants. They need the IPO to work. So for the first time ever in Wall Street, they want the investor to make money. There is a juncture that meets between the investors' motivations and the investment bank motivation. If the stock goes up, the stock will be attractive to a larger audience, and therefore it will be easier for the underwriter to finish the IPO process successfully. This is what I mean by saying IPO born for success. So usually we see IPOs going up on the first day. If the stock is meant to go up, it will have to breach the high of the first 5 minutes bar. So this is my line in the sand. Okay, if the stock manages to go above that bar, it signals me there is a good chance of a winner today. This is where I'm joining the party, and this is where I want you to join the party, when the probabilities are massively on your side. Not just a good chance to make profit, I want the best chance to make profit in Wall Street. Alright, so this is exactly where we are getting into at this example above 1374. Just look how it went up sharply. After 1 hour after starting, it was already trading for 1487. I won't be talking how we are going to manage it, and this is, one of the keys of success. This is something we are talking in the Top Trader. We are actually giving you a GPS for trading, and that means this is a program that you are going to put into it, couple of inputs about the stock, and it's going to like a navigator to help you to navigate along the price and not to be too rush in order to take profits too fast from the table before actually it's soaring up. So let's go back to the Facebook page and see which other IPOs we had. And every day we also have hot stocks here. Let's go to for example XTLY. Okay, so let's put XTLY. Okay, and this is the first 5 minutes of the stock, and actually this not every 5 minutes bar, the first 5 minutes bar is actually 5 minutes long. It's between couple of seconds to 5 minutes because they are going to start randomly in the 5 minutes interval. All right, so for example, in this bar actually started couple of seconds before the end of the 5 minutes interval, and therefore we see here a low volume, but immediately the volume picked up on the second bar to around 700,000 stocks exchange hands in the second 5 minutes bar. This is the full 5 minutes bar, so in this case I just put the entry above this bar, right above this 5 minutes bar, and this is 8:31, and from 8:31 it went to 10, and around 10 I took a quarter out of the stock, and of course I also realized some profits around these great movements. Let's go back to the most fantastic stock on Friday. Actually doubled its price within the day, and that was MCRB. And you can't get something hotter than that, than what we saw on MCRB, and this is just the cherry on the cream. So let's look what happened here on MCRB, and I'll just put it on the chart and just look how it works out. So this was the 5 minutes bar. Actually it started to trade around 11:52 on Friday, and as you can see the range is very, very high. The high is 30.39, the low is 28.11. Also it has a very strong volume. On the first 5 minutes bar it's more than 1.5 millions. Now most of stocks in Wall Street are not reaching this level in a day of trading, and this stock has reached this level of trading in only its first 5 minutes bar, and actually as it started 52 minutes after 11, it gives you only 3 minutes of trading. So again, this is the same. We are just putting a signal to buy this stock above the first 5 minutes bar. All right, I'm not going to talk about this stock about the trading management because it's all in our Top Trader course. And from there, actually guys, from 32 it went up and up and up and up, and all the insiders and institutional money, and this is something again that we are going to elaborate in the Top Trader course. If they are short or in stocks that they got allocated in the IPO process, they are going to get into the stock massively in the last hour of the day, and then the stock is really picking up all the motion here, and it ends around $850. So actually this stock started with a pop of 50%, but it ended the day with up 150%, and the result of trading the technique I'm showing you is more than $15,000. And again, this is a peek to my account on Friday, APPF, MCRB, and XTLY that I was actually traded. Thank you very much all for participating. Thank you all for coming into this special action. Shortly, Scott is going to proceed with preparing all of us for the next exciting week. As always, you are more than welcome to send me comments, to send me questions, to send me anything to shlomo@trainet.com. More than that, I'll be happy to see you in my Facebook page. Cheers all and have a wonderful trading week.